Hey, hello again. It's Greg Joseph Chuck, your premier luxury agent with Century 21 Lori Lawrence in Mooresville, North Carolina, coming to you today. For those of you who maybe this is the first time you're turning into my podcast or seeing me on YouTube, I am a fine home and estate specialist with Century 21 in the Lake Norman area, which is the northern area of the metro Charlotte, North Carolina market. Today is a segment that we call the Ask Greg segment. I usually do this on a Friday, and it's where I receive and I gather up questions that I've received or notes that I've taken from questions that from buyers clients I've been working with, and I say, all right, let's use those questions. I'll give you answers because these are just what I would call typical questions that I get as a real estate agent with buyers. And I should mention maybe as a little background, while I do specialize in luxury homes here in the Lake Norman area, of course I work with buyers that have a wide range of homes, not all waterfront homes, and a lot of them are first-time home buyers as well. So the questions are pretty broad. So I'm going to take a look at the first one I have here. And this one's a really great question that was sent in to me. And the question is, Greg, how much house can I actually afford? And this is always, to me, like the very first question that one should tackle. And it's more nuanced than just looking at, kind of what a lender will approve you for. So yes, getting the pre-approval, that's essential. But that basically tells you what the maximum a lender will loan you based on your income, your debt, your credit, right? So, but I think, there's other things to look at as well. And that is, beyond the mortgage payment. So you should be aware of that, right? So things like, of course, homeowners insurance, property taxes. Are you planning on moving into a community that has an HOA and has HOA fees, and how are those HO fees billed? Are they billed monthly? Are they billed quarterly? Are they billed, semi-annually or annually? So those are all things that should be factored in. And then if you are looking at waterfront properties, right, you might also want to budget for things like boat storage or dock maintenance or even in some areas, flood insurance. So those are all factors that you should consider when you're thinking about how much house can I actually afford. So kind of build your whole budget around the big comprehensive picture, if you will. And so the other question I have here, let's see. This is an excellent one. Yeah, this is one that I usually get, if I'm at a coffee shop and someone finds out that I'm a real estate agent. And it's, should I wait for prices to drop or should I buy now? And, I understand the hesitation that some people might have, right? Thinking that, hey, maybe I should wait, so that as the mortgage rates come down I get a better rate, I get a better house. And that's understandable. But I think, here's the reality. And that is, if you're trying to time the real estate market, right, it's nearly impossible. And waiting can actually cost you in the long run. And what I mean by that is, quite simply, it'll cost you a couple ways. It may cost you more in what the price of the home is tomorrow versus where it is today. Especially as more buyers jump into the market, it creates a greater demand, and therefore sellers tend to raise their prices or price at a higher price point to begin with. Also, on new construction, as more buyers come in, builders start selling more. They're less likely to price at a lower price point. They're less likely to throw in the types of incentives that we're seeing today. Mortgage buy down rates and, $10, $15, even $20,000 or more towards closing costs, different amenities that they're throwing into the house itself. So that's why it can cost you in the long run. But the other area it can cost you in the long run for sure is you can lose your dream house, right? So it may be a house that you looked at that it checked all your boxes. It's in the right community. It's in the right neighborhood. It's in the right school district. But you were going to wait just one more month for that mortgage rate to come down yet another notch. And by that time, the house is already under contract. So here's what I tell my clients, okay? If you find a property that checks your boxes and it's located in the community where you want to live and it's in the school district that you want your kids to go to and the price fits your budget, then what I say is don't hesitate. Jump in now and buy that house because literally that home could be gone tomorrow. And then you're back at square one, starting all over again, looking to find the right house in the right community, in the right school district, at the right price point, all over again. So, and I think sometimes people forget that. I think, they kind of get so wrapped up in, waiting for the right mortgage rate number to appear that they kind of lose track of, hey, I just missed a great buying opportunity for a house I fell in love with because I sat on the sidelines too long. So, so I see that all the time. And I can tell you it's painful for people that lose out on it. They get buying a house is typically, it's the biggest investment you're going to make, and it tends to be a very emotional one. And so, you kind of get all excited. Maybe you even brought if you're a first-time home buyer, maybe you brought your parents in to take a look at it, or you brought other friends in to get their advice, and you got all excited, but then you just couldn't pull the trigger because you're like, yeah, mortgage rate, yeah, it needs to come down yet, and then the house is off the market, and you feel let down, and I've seen that many times. So. There's an old adage in the real estate game. It's, date the rate, but you marry the home, right? And so, just realize that if rates are coming down and you believe long-term they're going to continue to come down, then you can easily go refinance that house. But, you have to weigh that out versus, do I lose my dream home? Waiting for that rate to come down, or do I go ahead, buy my dream home, and then refinance that house? So, all right, here's another one that got emailed to me. Let me see what this says. Okay. So this one says, Greg, what's the difference between getting pre-qualified and pre-approved? Okay, that's a great question, and I think this confusion maybe trips up a lot of first-time buyers. So, pre-qualification and pre-approved sound very similar, right? But actually they're very different in terms of credibility and usefulness. And so let me explain how that is. So pre-qualification is basically a rough estimate. So you're going to provide, your lender some basic financial information. Usually it's over the phone or it's online. And they're going to give you a ballpark figure of what you may be able to borrow. It doesn't involve verification of your finances. They're not doing a credit check at this point. They're not asking for any sort of detailed documentation. It's basically a starting point, okay? But pre-approval is the real deal, right? So that's when the lender actually verifies your income. They're going to review your returns. They're going to pull a credit report on you. They're going to examine what kind of debt you have, and they're going to underwrite your financial situation. So, yeah, big difference between pre-approval and pre-qualification. And so, especially when you're dealing in the luxury home market, where the homes, if you're dealing with a waterfront home that's $2.5 million, the seller is absolutely going to require pre-approved letter, proof of funds, pre-approved letter from your lender. So don't even Don't even think about going to see that beautiful mansion, that's $12 million on the waterfront unless you have that type of documentation. They won't even open the door for you if you don't. So, yeah, so I would just say that in today's market here in Lake Norman, especially for competitive properties, so we're beginning to see a trend of more buyers coming in, and we are now beginning to see some properties in some specific neighborhoods having multiple offers on them. And so I will tell you that if you're one of those buyers that are going to be in one of those situations, you absolutely, positively need to have pre-approval from your lender. Okay. All right. Let's see. Let's do another question here. How much should I offer below the asking price? Oh, yeah, that's another great question. And I would say the answer is it depends. There's really no magic formula. There's no magic kind of rule of thumb. There's no magic, percentage on what you should do in a situation like that. Really, this is a negotiation strategy. So you don't know, obviously, where the seller is going to settle on in terms of in terms of selling their home. And I cannot tell you how many times I have advised clients not to start off with an embarrassing low number because it will be rejected outright. And in virtually every time that I have said that, it has come true that the seller has rejected that offer outright, didn't counter at all. And in fact, oftentimes communicated, your buyer needs to get serious. So I would say, there's several factors though. And as a real estate agent, an experienced real estate agent that understands the local market, understands what homes are actually selling at versus what they're being listed at, okay? And that is something that I pay particular attention to, especially neighborhood by neighborhood, because believe it or not, it can vary pretty substantially. But I would say, first of all, you need to look at the market conditions. So, is it a seller's market? Is it a buyer's market? That is going to play a major factor in how much negotiating room you're going to have in terms of asking price. In fact, it wasn't too many years ago where, because it was such a very hot seller's market, that I was advising certain clients on certain properties where we knew we had multiple offers on that property to submit above asking price, again, if that was the home they really wanted. And even that sometimes didn't work because someone outbid them. But so understanding what type of market you're in, the current market conditions, is really important. The second thing is to look at how long has that property been on the market. Okay, so days on market, that is definitely going to be a factor. And the reality is the longer that a home is sitting there days on market, the greater likelihood the seller is willing to negotiate a better price. Now again, that's in general. I've certainly seen and even worked with sellers who have dug themselves in and said, I will not accept an offer below a certain price, and that certain price may be higher than what any buyer that has looked at that property is willing to pay for it. So, so I would say that if that home has been listed, very recently, 10 days or less, the seller is probably not going to negotiate a very low selling price. But if it's on the market 90 days or more, that's a whole different category. Okay. The third thing is always look at comparable sales. I mean, that is always a factor. And as a real estate agent, that's one of the first things that I do for my buyers and of course even my sellers when we're listing it, right, is you pull the comps to see what is sold in that neighborhood nearby that property, apples for apples, in order to figure out what's the true market value currently at. And again, that varies and that changes, and that can change very quickly. If mortgage rates were to drop, a full point, that would bring a tsunami of buyers in, and that could change the market overnight. Now, I'm not saying that's what's going to happen, but I'm just saying that those are the kinds of things that could move a market very, very quickly. And then last thing I would say is the actual property condition, right? So if the home needs updates, if it needs repairs, you need to factor that into the negotiating part of it in terms of what you're going to price it at, and that will justify a significantly lower price. So I know I said, if you come in at a really low ball number, there will be sellers that will reject it outright, and that is the case. But if that property's in great condition, doesn't need any work, has been renovated, updated, yeah, that seller's not going to budge more than likely, or very little. But if it's the opposite of it, if it's a very old property or an older property, outdated, needs renovation, needs work, needs repair, it's much easier to start justifying and begin to position your strategy as to why you came in with a significantly lower offer than what the seller is asking for. So again, just remember that when you are buying and selling a house, everything is negotiable. Virtually everything is negotiable. And so those are the things to kind of consider. All right, we're going to do just one more question, then we're going to wrap it up for today. Let me see. Next question is, what are the biggest mistakes first-time home buyers make? Oh, well, let's see. I guess I could tell you that after working with all kinds of home buyers, I've seen some patterns in mistakes that cost people money, time, certainly frustration. So let me share some of the most common ones that I see and I can remember. I think probably number one would be falling in love with a house before you've even been pre-approved. So that would probably be, I said this a little bit earlier, that when you're buying or selling a home, it's a very large financial investment, but it's also a large emotional investment for a lot of people. And so, if I would always advise someone to get pre-approved first, understand what they can afford, price range they can afford to buy in, before they start actually looking for a home. Because, we're people, right? We're emotional creatures. If you're married and you and your spouse see this home and you fall in love with it and you're all excited and then you find out you can't afford it, it's a big letdown, right? Okay, so the second one is really probably, for me, I think the second one is not having kind of run the numbers ahead of time in terms of total cost of ownership, right? So there's so much more than just trying to make a mortgage payment, right? There's homeowners insurance, there's taxes, right? There may be upgrades and repairs that you have to factor in if it's an older property. There could be HOA fees. There's kind of a multitude of all kinds of different costs that can pop into the equation. But if you're kind of not knowing ahead of time some of those numbers, I think it's really important. That's a mistake that you really don't want to make, because this kind of goes back to point one. After you kind of run all the numbers, you may find out, geez, I shouldn't even be looking in that price range because I just can't afford it. Okay, and then number three, and I've seen this kind of ebb and flow, kind of depending maybe on how the economy's doing. But it's, should I skip the home inspection? Do we really need a home inspection? Well, I'm not a home inspector, so I'm not going to advise you from that standpoint. But as a real estate agent that have seen all kinds of homes in all kinds of conditions, both ones that are visible and ones that are not that visible, ones that only a home inspector can, because of their expertise, can really find for you, really discover for you. I would always advise my clients, my buyer clients, to get a home inspection. And you're going to get a very detailed report, and it's going to point you in the direction as to whether or not this is a home worth buying or not from your standpoint, right? And listen, not doing it is kind of, in my opinion, penny wise and pound foolish. So yeah, home inspection is going to cost you, I don't know, $400 to $600 range, and is it really worth you putting that much risk in the overall home ownership category versus saving for $400 or $500? So, anyways, that's kind of the key the key factors in terms of common common mistakes that I see first time home buyers make. There's only one other that kind of came to mind right now as I'm wrapping up, and that's maybe not thinking long term. So, a lot of times a first time home buyer will tell me that this is our first home that we intend to buy, but we'll probably move out of this sometime in the next 10 years, which is great. But a lot of times I see first-time homemakers totally forget that hey, we're not gonna live here forever, right? So I mean, I think that's a factor that you should consider is because again, you may have a reason. You may be relocating. As an example, this market, especially in the Mooresville area, about 30 to 40% of buyers here are people that are buying because of relocation. And they may need to get into a home fairly quickly. School year may be approaching. They may have children. The house may check a lot of their boxes, but not all of them. But it's in the right price point, right? But they've already told me this isn't going to be their only house that they're going to live in. I mean, that eventually they're going to sell this one and buy another home in the area. And so I would just advise a first-time home buyer, don't forget that aspect of it. So because you don't need to put all that pressure on yourself to find the perfect home that meets all your requirements if you're intending on moving in 3 to 5, 6 years, right? So because a relocation in itself I've been through 6 of them myself in my corporate career. So yeah, that can be pretty emotional and pretty stressful as well. So all right, hey, that wraps up this session of Ask Greg, and I thank you again for inviting me into either your living room if you're watching this on YouTube, or in your ears if you're driving down the highway and listening to this on a podcast. If you are on YouTube, I guess I should say, do me a favor, hit the like button, give me the thumbs up, be a subscriber, all those kinds of good things. As you can see, I'm just beginning to build up my YouTube channel, and same thing with my podcast. I'm just becoming a social media expert, I guess, and I'm looking forward to your support. So thank you very much. Have a great day, and as always, enjoy the lake life. Talk to you later. This is Greg Josephchuk. Good day.